Good morning, traders. Just a quick catch up following on from last night's webinar. I've had quite a few questions regarding Euro and how to deal with it, how to manage. So just thought I'd construct a quick video, just going back what we went through. So I've taken you back to 2015 now. As you can see, 3rd of Feb 2015, breakout sort of end of 2016 in here. So marked in brown are the harder levels of support. And as you can see over the period of 2015, this was a very strong rejection point. So drawing it briefly here, we're sitting in and around sort of 1.1440, 1.1450 area, and we've got lows of 1050, which is down here as stronger support. So when we're trading range based, I like to call it marking out your house. So mark out your floor, mark out your ceiling, and here's your trading parameters in between. Now, marked in grey are the current levels we're seeing at present. But as you can see, going back to 2015, they're acting as softer levels of support resistance. So it's almost like you're building your tiers to play between. As you can see, as price has gone from bottom to top, it's used these tiers as support rejection points, which is why it's always good to leave them in. As you can see, it always comes back to retest these levels. So it gives you a bit of a guideline to work towards. If we take a deeper look a little bit closer into 2016, start of 2017, we've still got our top of the range, we've still got our bottom of the range. Now, A to B, yes, it's gone down, but it's been a very bumpy road since. One thing that starts to stick out is what we can see is there's some sort of bearish pressure, selling pressure being pumped into the market. You've seen you've got bearish trend line being respected. Now, at this point here, yes, we've got our lower lows, lower highs, lower lows, lower highs, lower lows, breaks, bottom support. So now we're saying, well, when it's at this point, we need to identify some sort of reversal pattern. We're not going to dive in low. This is like jumping on a train that's already left. We're at extreme lows now, so we've got more probability making money when we're buying. And if you zoom out at this point, you'll see that it's incredibly low area for Euro. Now, looking at the actual structure of this, you can see what was showing nice, cleaner, deeper cycles. Price action starts to run slightly slower as we've got strong selling in here, then turns into, and weak buying turns into strong buying, weak selling. And that's the transformation of a downtrend into an uptrend, what we're seeing. So pattern-wise, there's your lower highs, lower lows. Here you can see price failed to make a higher high. So we haven't quite got that rejection point yet, but we're now thinking to ourselves, well, it's failing to go any lower. I definitely haven't got clean lower highs being formed as our trend-based pattern, which was what we were seeing back up here when we was trending. Price then comes down, retests our support level, and forms a inverse head and shoulders pattern. So now we're saying to ourselves, it's not quite ready yet, but technically it's looking great. And you've got to remember, this is over a period of a couple of months. So all of the opportunities in here, buying and here selling, are valid on an intraday basis on a smaller time frame. We then have the opportunity again, price comes up, tests this trend line for the 5th time, and the 200 moving average. So any intraday buying, that would be your target. The fact it's failed to reject several times previously. Price then pulls back and creates its first bullish pattern as a higher high, higher low, higher high, higher low. We've got 2 complete bullish cycles above daily support and strong daily support, indicating a potential move higher. Now, we've got to bear in mind, you've got all of these softer levels and you've got your hard level in front of you. So as we're buying in here, target your soft level, pull back to the 20 moving average. This is a technical entry we look for anyway, as per the core strategy. Looking for price to make a higher high, breaks the 110 region. As you can see, prior to this, 110 was acting as support. And even obviously, this is 2015-16. When we go to present 2020, we can see 110 has been a level we've been buying and selling from, in fact. Again, higher low, higher high, higher low, and up we go, right up to 120. So we've gone from lows of 1.0385 up to 120, so a hell of a long run here. Now, just to zoom out and show you again, here's our range base for the whole of 2015. Here was our range base that we're slowly starting to see that change of pattern. It come down to support, showed a reversal pattern, up it's gone, and then obviously with trending, moving extremely well, bullish, 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 and then we hit a period of consolidation again. So this period of consolidation, and excuse all the lines, I've just put them in to show you this to hopefully make it easier for you. Consolidated. So what's had a fantastic bull run for this from 24th of January 2018 to mid-April, it's gone sideways. So what a boring patch we've had with lack of trading opportunities. We then see, as you can, from top left to bottom right, price starts moving in a downtrend, and this is where it brings us now. So just to show you, and I'll zoom out, take you to a weekly chart. Strong uptrend, strong downtrend, back to support. Shut the door. And this is exactly what we're seeing. So 3-touch rejection, weekly trend line. Look how low we are on the chart. I mean, it was only back in 2014 we was up testing 140 euro dollar. We're now back below sort of, well, I mean, we're in and around 120 as we speak at the minute. So just to show you what we're saying is this: uptrend, consolidation, downtrend. Now, if we look a little bit closer as to where we are now, this is something we've seen. Look, so we've been in this range base. This is obviously news driven, safe haven buying, market crash, and so on. Correction, and then as it's correcting, it's got stuck in this sideways period of a range. Now, this is obviously what we've been trading over recent times, buying at 107.70, selling off 110. So if we're trading opportunities in a range, you know we have to buy at the beginning, sell at the top, buy at the bottom, sell at the top. All in here is range. All in here is messy, it's choppy. Intraday buying is valid, but they're not high probability technical setups. Now, within our range, look what we've seen. Hit support, hit resistance, pull back, higher low formation form. Now, 110 strong support. So once we've seen this higher low form, 110 has to be your target because probability-wise, it's rejected it multiple times previously. Once we break the 110 level, so intraday buying is valid in here up to 110. Once we break 110, you've got to look for your next target. It's cleanly broke the 200 moving average. We've had several days of buying. And if you just drop down to the 1 hour chart, move my level there. If you just drop down to the 1 hour chart, look how many interactions from the 20 moving average you have. And even prior to that, prior to 110, you've got a couple of opportunities to buy up into that level. So by understanding daily direction, building your foundation, building your structure, looking at potential targets, you can kind of have an idea of where price may get to, and that's how you adapt known direction to drop to the smaller time frame where we provide, or where the time frame provides more bars, more opportunity, more cyclicity to allow you to get into this trading opportunity. So where we currently sit at the minute, I'm just going to take you back up to a weekly chart. Price met this level's just moved. Is at 1250 currently. Weekly channel in place, as you can see, weekly trend line rejection. So we're now in a position where we're due a pullback. Price is testing support, testing channel, close to 200 moving average. If it does break, that will be the next target. But as you can see, ideally, we're due this retracement. So to move back to a daily chart now, today's open pretty bearish. Rejection, we're overdue a phase 2. This has moved 9 trading days without having any sort of breather. So within our range now, we're seeing a potential breakout. So I'd like to see price pull back. I don't think it will pull back to 110. 111 might be a reasonable position to look for a higher low formation, bullish price action above all moving averages. And then we trade back up to this level, back up to the next level, and back above. But we have to see some sort of pullback. So to show you that what we saw in 2015, 2016 is exactly the same. We're in here. We saw a higher low in our range, another higher low in our range, and then we saw the breakout in trend. So this pattern here at the start of 2016 is exactly what we might see, and it looks like we're seeing currently. First high low within the range, break up, pull back, retest, break up, pull back, retest. So they're your daily entries and daily opportunities. And zoom out on your daily, your weekly, find your strong levels, find your hard levels of support, resistance. Look at using them as technical setups, entries to take profit, to look for your next trading opportunity, to judge the momentum if price breaks a strong level, to then use the smaller time frames to get in. But this is exactly what we want to see. Now, all the time we're in these phases here, phase 1s, bullish push phases. That is when we have the confidence that we understand direction of a daily chart. We understand direction where the daily may get to. We build our parameters. If we have enough space to make money, then we drop down to the 1 hour, 15 minute, even the 4 hour, you get a deep enough retracement to look for your technical setups to buy within the direction. So just wanted to show you what we're seeing now is, thank God we're breaking out this range. Well done to the dollar for weakening off to get us out of that boring position that we've had for the last few weeks, in fact months. Strong breakout, Euro's looking well, overdue a pullback. It's ideal that it's rejected resistance, rejected trendline support, trendline resistance. It's giving us another couple of reasons to say yes to pulling back. Obviously, the opposite of that, dollar's trading in and around 97.50. So all the time we're seeing short-term dollar strength. I think dollar may come back into 99, then reject. Obviously, euro adapting and obviously working in opposite. So short-term dollar strength will allow euro dollar to weaken off, give us a cheaper price to buy at, and back up we go again. Okay, guys, any questions? Drop me a message.